All right. Back to work. Break time is over. Boy, these markets just keep going up and up and up this week. Another big move higher this afternoon. Now, I got some good news for you. The game plan is pretty simple for tomorrow. We had a big move higher today, and we got a couple of ranges right below us in the NASDAQ and the S&P. Put those two clues together. Big move higher, trading ranges. That makes the game plan very straightforward for tomorrow. And as always, I'm going to cover my favorite trades for tomorrow morning. I want to make sure everyone has a roadmap, a game plan to make some money tomorrow as well. So charts are ready to go here. Enough of the intro. Let's get some charts going and go find some more winning trades on Thursday morning. S&P and SPY is all ready to go tonight. NASDAQ, triple Qs are ready to go. I have three very simple but very important clues on these charts right now that are telling us where I think the winning trades are coming for tomorrow. One of those big clues is right here on these hourly charts. We're definitely bullish overall on the S&P and SPY, bullish overall on the NASDAQ, triple Qs. You probably don't need me to tell you that, but it's a very important first clue because I like to use these hourly charts as an overall directional bias, a directional filter for our faster time frames. Now, that's one important clue. I have two arguably more important clues on some faster time frames. There's no news on a schedule for tomorrow, so we'll skip the news breakdown. Let's go talk about those two important clues on some tick charts because it's good to know the big direction, but as always, right, we're not going to time entries off an hourly chart. Let's drill down to some tick charts right now. Remember, tick charts are based on volume. They make pattern recognition a hell of a lot easier. All the time frames, by the way, are in the upper left-hand corner. That's a 7,000 tick chart. And if you're watching for the first time right now, welcome aboard the channel. That is the 21 EMA. It's the only indicator we use in our trade room to find lots of winning trades each week. I mentioned there are three total clues. One was on the hourly chart. Second clue here right now is you can see how big that move higher was, right? Another big move higher today. Now, why is a big move higher an important clue? Well, because I don't want to buy high after a big move higher. I want to buy low. And anytime we see a big move in one direction, we know usually the best buying opportunities are going to be on a two-legged pullback. Whenever I see a big move higher, I look for a measured move, a two-legged pullback, and a retest of that high. But arguably what the most important clue here are these trading ranges. Range below us and range below us. Now, why are these ranges so important? Well, if you watch my videos often, you know that breakout pullbacks are one of the most consistent things I know about trading overall. You'll notice I have a breakout pullback zone right here and a breakout pullback zone right here. What do you notice about these two zones? One of them is relatively high. The other one is much deeper. These are both areas of support for breakout pullbacks, but the size of that pullback is going to tell us to use two slightly different types of entry patterns. We'll talk about that in a lot more detail in a moment. So we have a big move higher on the hourly chart, a big move up, of course, here today on the tick charts and ranges right below us. That tells me I have four types of trades I'm watching for tomorrow. And I'll tell you, there's one more bonus trade. If you want an easy way to avoid losses and make some money tomorrow, I have one more bonus trade we'll talk about towards the end of this video on the NASDAQ. So four basic setups on the S&P and SPY. On the NASDAQ though, I'm going to help you avoid losses on these breakout pullbacks. You'll want to take some notes, stick around all the way to the end of this video. So let's jump right in. The first trade, of course, here is going to be a relatively shallow breakout pullback. Now, in my trade room, I always talk about the fact that there's no free lunch in trading. There's always a problem. The problem is always either location or it is momentum. For example, right here, the problem is not momentum. We still have a lot of bullish momentum if we see a shallow pullback. The problem in this situation is location. If I buy that shallow pullback, I'm buying relatively high. After a big move like this, it's a relatively shallow pullback. So knowing that, if I see a shallow pullback, this is where we have to look for what's called a technical bear trap. Now, technical bear traps are very, very easy. We'll trap the bears in, let them try once, go higher, try twice. Now watch closely. I want to get right below that prior swing, look for a strong green candle closing above that 21 EMA, and that will be a technical bear trap. Now, you can string together a couple of these bear traps. We know the market wants to go back and take out that high, right? So as we're going back up to take out that high, I can string together a couple of these bear traps. Now, these look a bit different, but they're actually the same exact pattern. One is more of a reversal bear trap, higher high in price, below that low. The other one is more of a commonly known bear trap, right? Higher high in price, right below that low. Again, bear traps, whenever I am buying a shallow pullback, location is the concern. I want to buy as low as I can. If you've gone through my free video classes, you know, right? Traps are my favorite entries in a shallow pullback. Now, what if we don't get a shallow pullback? I would love to get that deeper two-legged pullback. I mean, this would be a fantastic area on a deeper pullback. Now, what's the problem now on a deeper pullback? My problem now is momentum, right? As it rolls lower, what's going to happen is as it pops up, it's going to want to retest that low before we run back up again. So knowing that location is okay on this, but momentum is a problem, I'm not going to try to pick a bottom on this. Very difficult to pick a bottom when it really drops after a big move like that. So again, I find my two-legged pullback. Think about that measured move. The market wants to go back and take out that big high. Think about now that failure pattern I teach in the free video course. Don't try to pick the bottom on that. Let the bears try once. Let the bears try twice. This is a horrible spot to be a seller, right? You would never want to sell down there. So these are professionals. Professionals are not going to sell that. These are rookies. Small stops, small accounts. Think about where their stops are. And we're going to use that failure pattern I teach in the free video course. I'm not so worried about buying too high now. I'm worried about this thing continuing going lower. So let those bears get in, squeeze those stops, and then as always, after a failure, we see a lot of these in our trade room, right? You want to get that technical bear trap going higher, right? That technical bear trap going higher. So a two-legged pullback would be ideal, right? Get somewhere down around that previous trading range there. Again, failure pattern into a trap pattern like I teach in the free video course. Now, one more variation. We've covered 2 out of 4 trades so far. Let's talk about trade number 3. We may not get that failure pattern off that low. Sometimes we'll get that two-legged pullback, but because everybody is so bullish right now, I may not get a chance to trap those bears in and squeeze stops up. A lot of times it'll whoop and go right back up again and V-bottom off of that low. If it V-bottoms off that low, although it's not my favorite, what I'll do is look for the market to begin to grind going higher. Whenever we V-bottom off a low, what happens is all the bears who are chasing after it, they're going to see that V-bottom and start bailing on this. That creates that grinder going higher. The buyers, though, are going to want to buy as low as they can, right? Because they're not going to want to chase after it going higher. What your job tomorrow is, my job tomorrow is not to chase that V-bottom going higher. What I'm going to do is draw a trend line off the highs, mark off that low, then as we always say, look left, find one of these prior swings, and I want that first entry, right? That first test, we call it in the trade room, that first test off the low of that channel. Now, this could be a bear trap. Look at me showing you here. Oftentimes we get underneath the 21 EMA. Bears will come in, try to sell short. That's what failure patterns look like. Failures pop up and pull back to that 21 EMA for a pullback entry. Really, any of the entry patterns you guys are learning in the free video course can be applied in this area. The most important thing, though, is if all we get is that V bottom off that low, don't chase after it. First test trap, failure, pullback combo, and leave that runner to go back up to retest the high. Now, I have one more trade I'm going to talk about. Before we do that, though, let's slow down for a second, because I know most folks watching right now, you know these patterns already. You're making money with two-legged pullbacks, failures, traps, okay. But if you're here for the first time right now, this might be a brand new language I'm talking about, right? What the heck is this guy talking about? Maybe a brand new strategy you want to learn more. I teach the entire strategy. In fact, I have hundreds of examples of failures, traps, two-legged pullbacks, breakout pullbacks. I teach so much more of this in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent money. Guys, the bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I share in that short video series. The best part is it's 100% free. And also be aware too, I'm going to put all the important links we talk about tonight in the description of the YouTube video. Definitely start first on the free video class. Watch the trade examples. You'll love the free video course. And don't forget, the place to be every morning is in my trade room, 8 o'clock Eastern time. I'm going to put all the trade room membership links there for you in the description of the YouTube video. And if you're on Twitter or X, as they call it these days, I post a ton of charts, videos, mindset stuff during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more, we write down in the description of this YouTube video. So where did we leave off? 4 trades here on the E-mini SPY. And again, I got one more bonus trade, one variation trade we'll cover here a bit later here on the NASDAQ. A 4th and final variation. You know, we oftentimes, after a big move up like this, we oftentimes will get that two-legged pullback, nice deep pullback. We'll get our 2 tries down here, right? We'll squeeze those stops running higher. What I do is I use a 1-to-1, right? The size of a stop is the size of that first target, right? We talk about that a lot in the free video course. So oftentimes what happens though is we'll take out the underbelly of that first leg going lower. And because the market made that strong run down, it wants to retest, right? So oftentimes I'll get my 1-to-1 target. I'll get that stop up to point of entry. It's a winning trade, right? But now we get one more leg going lower. Now it's very important to remember what's happening right now. This is not a reversal. It's simply the market trying to pull back deeper to attract in more buyers. Every once in a while, that leg becomes a measured move going lower as well. The most important thing I want you to remember is that as we take out that low, as we retest that low, right? Anybody who sells up here, they're taking their profit down here. Sellers up here become buyers down here. Is this a good place to sell short? Please say no. Please say no. This is the last place you want to sell short, because now you're selling low at support. But I'll tell you right now, when I was a rookie, I would chase these things all over the chart. I wasn't paying attention to long-term trends. So I know from experience, right, because I was one of them at some point almost 20 years ago, that rookies will chase this thing lower. This is another bite at the apple. In fact, these retest trades, these double bottom trades, are oftentimes the most lucrative trades we see in our trade room. Now, again, I don't know how far that move will go, right? I don't have a crystal ball. What I do know, though, is it's a horrible spot to be selling. If I can get bears trying once, trying twice, why don't we trap those bears in, squeeze those stops? Again, it's a failure pattern like I teach in the free video course. And remember, anytime I trap the bears in and we start going higher, we add to our winners. Or if you miss the failure pattern entry, jump back in now on the bear trap combination. So a double bottom retest, we call these retest trades in our trade room, right? We get that deep pullback, we get the two-legged pullback, the failure pattern going higher here. Again, oftentimes it's a winning trade. We hope it goes back up and take the high out overhead. But if it doesn't and it runs back to retest that low, I know it's scary because it feels like the market's reversing. But look at this 60-minute time frame. We're so high up right now, there will almost always be a ton of buyers waiting to buy another leg lower. And as always, there'll be a fresh round of new traders who haven't learned this lesson yet. They'll chase after it. They'll believe the news media saying this time is different. They'll get trapped right with a failure. And of course, we'll add on with that bear trap pattern going back up to retest the high. All right. There are 4 trades here. Those can all be applied to NASDAQ as well. Now, talking about the NASDAQ, right? right now. NASDAQ has been strapped to a rocket ship the past couple days. My goodness, up and up and up and up. Definitely not the bull trap that we speculated we might get in last night's video. Now, before we talk about NASDAQ right now, if you're enjoying this video tonight, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies, because YouTube rewards me every time you like and subscribe. I get it. I know we're all busy people these days, and I appreciate you guys spending a few minutes with me every evening on these YouTube videos. So thank you so much for the likes, subscribes, and all the ongoing support. Now, let's get back to business and talk about the NASDAQ. Look at the size of this move. Look at the size of that move. Now, I don't want to get too far ahead of myself, but the last time we saw a big move like this, do you recall what happened? Yeah, hopefully that bill doesn't come due before we take off for Christmas break here. All kidding aside though, all right? All kidding aside though, big move up. We know we're a bull market right now. You didn't tune in tonight to hear me say that right now. Let's go tick charts right now. Over the tick charts here, a 4,000 tick chart. Again, tick charts make the entry timing so much easier. Look for yourself. Compare a 1 minute or a 2 minute chart, right, to a 4,000 tick chart. The patterns are so much easier on tick charts. It's worth paying a bit more money to get the better data because trading is very visual, right? Whatever I can do to make the visuals easier is worth spending the money. Look at the size of that move, right? Very big move here. Obviously, markets are loving what they're hearing at a J-Powell, out of the news we're seeing right now. Big move. Now, big moves tell me don't buy high, right? Buy low. Think about a two-legged pullback. At the same time, you got ranges, right? Ranges. Now, one difference about the S&P and the NASDAQ. The S&P, let's go back to the S&P for a second here real quick here. The S&P has a pretty firm breakout of that range. The NASDAQ, not as convincing. Now, in the free video class, we talk about ranges and how they like to rotate, right? The amount above the range can project now back down below the range. If I had it my way tomorrow, I would get that pendulum swing combined with the low of that bull channel. It's a beautiful channel right there. It seems like that is a sweet spot right there. That 213.88 and a quarter there, roughly, right? Give or take a few points there on the NQ. It'll be similar, of course, on the triple Qs. But you'll notice we have a couple different types of breakout pullback areas, right? So I get a relatively shallow pullback area there, a deeper pullback area here. I mean, if we're really lucky, we'll go back and touch that prior all-time high, right? That prior all-time. Okay, so if you followed along on the S&P, you probably have a good idea of what the NASDAQ plan is as well. Now, in a moment, I'm going to talk about that variation I want you guys to keep in mind for tomorrow. Okay, if you want to avoid losses, I'll give you an easy way to know how to avoid losses on these pullbacks. So, as always, a shallow pullback. What's the problem? There's always a problem, okay? It's momentum or it's location. If you don't know the problem, you're just ignorant to the problem. You're naive to the problem. You're not experienced enough. There's always a problem. A shallow pullback says what? Traps. Why traps? I want to buy as low as I can, right? Higher high in price, trap, back up again, right? Got to be traps on a shallow pullback, right? Buy as low as I can because I'm buying relatively high. Two-legged pullback. Right? Two-legged pullback. Love the idea of that one. Combine the pendulum swing with that channel. Okay, two-legged pullback. The challenge is no longer location. Now we have a lot of bear momentum now, right? So again, I'm not going to pick the bottom on these. And again, it could be here, really anywhere, like right in this area right there, right in that area right there, will be fine by me. Two-legged pullback. Again, don't pick the bottom on this. Think about that 1, 2, location is not the concern anymore on this. Now I can be a bit more aggressive on these. I don't need a bear trap. It's a failure pattern on this one. So failure, and I call these failure patterns, by the way, they're basically a failed reversal. Right? A failed reversal. We trap the rookies in. I learned this pattern by being one of those rookies, right? Who chased after this thing. And a number of years ago, I thought, what if I simply do the opposite of what I'm doing? And that kind of led me in the direction of finding what I call a failure pattern almost 20 years later. It's always that failure. And then, of course, as we go higher, right, it'll be that trap add-on, right? That separation off the moving average, higher high in price, trap right there. A lot of examples of that pattern. All of these patterns, a lot of examples of those inside the free video course. And again, target is back up to retest the high. Now, let's talk about that variation I mentioned earlier. Now, the markets have been moving up and up and up right now. Have you heard the saying, buy the rumor, sell the news? Buy the rumor, sell the news means that markets oftentimes will price in what they think Jay Powell will say, right? We had just a Jay Powell speech this afternoon, right? So markets may have already priced in what they thought he would say, and now that he's out of the way now, we may get a sharp sell-off. I mentioned earlier, the last time we saw a big move up like this, it was a pretty sharp sell-off. So one easy technique I want to keep in mind for tomorrow is if we pop down and we start grinding down, it will not be a sharp move down, right? It'll be a pop down and grind. You'll see it, right? It'll pop down and grind going lower. In my trade room, we always say, be very careful fighting against a grinding market. Because what happens is it drags that moving average down. It brings the 21, the 50, the 200. It brings them all down with it. Now, when it grinds down like this, it can be very difficult to pick that bottom, all right? Oftentimes, it'll keep going and going. Very tough to pick that bottom. In these situations, there's two trades I look for. Now, one of them is kind of the easy one. I'm gonna mark the 38.2 retracement. Okay, that 38.2 retracement is a bare minimum pullback. My favorite trade in these situations is a 38.2 retracement and a retest of that low. Now remember, anybody who sells short on that pullback, their profit targets are at that low. Sellers up here become buyers down here. Now, this is a much easier place. Trap those bears in, squeeze those stops. I'll tell you, these oftentimes will rip and squeeze right back up to retest the high. Okay, so an easy way to avoid losses on these pullbacks, if it pops down and begins grinding down, very difficult to pick that bottom. My favorite trade on this is find that 38.2 retracement, right? 38.2 retracement, and wait for the pullback. Once it retests that low, now we've got a reliable trade going higher. Again, it's a retest trade, right? Retest trades are awesome trades in an overall bull market. Now, I know what you're thinking right now. I know what you're thinking. Wait a second. Wait. Why don't I sell the 38.2? I know you're thinking that right now, and you should be thinking that. Why not sell? Because we're not a bear market. We're a bull market overall. Oftentimes, I would say probably 40% of the time, we get that pop, grind down. We get our 38.2, but guess what happens? It just blows right through it and gives you a V bottom. We're not a bear market. We're a bull market. Don't forget about that, right? So now, that's why I don't sell that 38.2. Now, what do you do in those cases? Well, what's the problem now? What's the problem? If we start to rip and run going higher here, what's the problem now? The problem is I'm now buying too high now. I'm buying too high. The bears want to come back and retest that low. This is where traps come in, right? Traps are always going to be, it's basically that V bottom technique I talked about earlier on the S&P. Makes sense, right? So if it grinds down, I know it's kind of frustrating because it's very difficult to pick that bottom. Again, it'll grind away. It'll drag those moving averages down like that. Very tough to pick the bottom on that. My favorite trade is the retest trade, right? Let it pop up, retest, buy the retest. That one is my favorite out of all of them. But again, the reason why I don't short that 38.2 is we don't forget about it's a bullish overall market. If it rips and pops up, I then go out, draw trend lines off those highs, mark off that low, and remember, the problem now is I don't want to chase after it. Buy as low as I can, and whenever I say buy low, you always want to think bear trap, right? Bear trap, get underneath prior swings, and so bear trap patterns, get below a prior swing when it's prior swings is the key entry there. Strong green candle above the moving average, like I teach inside the free 40 course, and leave that runner, right? Leave that runner back up to retest the high. buy. All right, guys? Well, I'm getting excited just talking about this stuff right now. I always enjoy sharing my ideas and my game plan on these videos. Now, speaking of the game plan, that's the plan for tomorrow. Tomorrow morning, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to make consistent money in these markets is to learn and trade along every morning at the opening bell. Again, I'm going to put all the important links you'll need to learn more in the description of that YouTube video. Start first with the free video course. Everyone loves all the trade examples, the lessons in that free video series. Then come join us, trade along in the trade room, and we'll do it together every morning at the opening bell. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.